London learned early that energy defined power across rising industrial nations. Coal built empires, but oil built something far more enduring globally. Oil shaped armies, economies, currencies, and entire geopolitical destinies instantly. And London realized whoever priced oil ultimately controlled the world. Britain entered the oil age without deserts, wells, or natural abundance, yet it soon commanded global petroleum through information, finance, and strategy. London controlled contracts, insurance, shipping, pricing, and international energy investment. Power lived not underground, but inside polished rooms near Cornhill. The city understood oil differently from nations possessing physical reserves. Oil was risk, volatility, speculation, and fragile international dependency combined. Controlling those elements meant controlling every government requiring energy security. London mastered this equation earlier than Washington, Moscow, or Middle Eastern states. Britain saw oil not as resource, but as geopolitical architecture. Ships needed fuel, factories needed power, armies needed relentless supply. Oil determined victory, defeat, modernity, survival, and national global relevance. Those who financed oil shaped the future more than producers. The Persian oil story marked beginning of London's energy dominance. British officials recognized strategic opportunity inside Iran's resource-rich southern lands. They secured concessions, offering unprecedented control over extraction and distribution. Oil flowed from Persia into British warships powering imperial maritime strength. The Anglo-Persian Oil Company became cornerstone of British influence internationally. It acted as cooperation, intelligence asset, and geopolitical instrument combined. London protected it fiercely, knowing global power depended on petroleum. This company grew into BP, symbol of Britain's global energy reach. Oil reconfigured British naval strategy, replacing coal with high-energy petroleum. Fuel efficiency increased fleet mobility, endurance, and strategic unpredictability dramatically. Britain's navy became unmatched, projecting influence across oceans effortlessly. Economic dominance blended with military superiority in unprecedented global synergy. London built insurance networks necessary for transporting oil worldwide safely. Lloyd's insured tankers, companies, and geopolitical risks few others understood. Insurance shaped trade routes, shipping lanes, and strategic maritime decisions. London didn't just finance oil. It protected every barrel shipped. City bankers formed backbone of early multinational oil expansion strategies. They funded pipelines, tankers, exploration, refineries, and complex offshore operations. Bank loans determined which nations industrialized and which fell behind. Oil money flowed through London, strengthening its position vastly. The Middle East transformed rapidly as London financed developing petroleum frontiers. British geologists surveyed territories, determining future global power distribution. Companies negotiated concessions that shaped borders and political alliances. Oil redrew maps long before diplomats formalized new national boundaries. British diplomats and corporations operated in perfect synchrony across continents. Embassies secured political stability, enabling British companies to function profitably. Companies funded local development, ensuring governments remained cooperative willingly. Energy influence became ecosystem sustained by finance, diplomacy, and logistics. London refined the art of controlling supply without production. It managed shipping capacity, refining capability, and international distribution networks. These elements ensured producers depended on London more than consumers. Control meant influence extending beyond geographic limitations or declining imperial territories. As automobiles spread worldwide, London sensed rising global energy dependence. Cars required fuel, fuel required stability, stability required financial coordination. The city became clearinghouse for global energy transactions worldwide. Oil pricing mechanisms evolved inside London's brokerage rooms quietly. Oil companies adopted British corporate structures designed for international operability. Contracts followed English law, binding nations into London's legal framework. By writing agreements, Britain shaped rights, royalties, risks, and geopolitical alignment. Paperwork became empire reinforced through capital rather than military occupation. Global energy markets grew increasingly reliant on British maritime insurance services. Without coverage, no tanker could operate legally upon international waters. This dependence strengthened London's authority over global petroleum logistics significantly. Insurance became an invisible weapon shaping energy access around the world. The Suez Canal crisis revealed fragility of traditional oil routes dramatically. Britain learned supply chains required redundancy to maintain strategic flexibility. This crisis accelerated construction of pipelines, bypassing politically volatile choke points. London financed these efforts, preserving influence despite shrinking territorial control. Oil magnates worked closely with London bankers, coordinating enormous capital requirements. Refineries demanded modern engineering, logistical planning, and unprecedented financial commitment. The city delivered resources necessary to transform energy infrastructure globally. Britain remained indispensable regardless of geopolitical shifts in oil-producing regions. After empire collapsed, many expected Britain's energy influence to fade. But London expanded power by modernizing financial mechanisms around oil. Energy futures, derivatives, and structured contracts emerged from London's markets. These innovations revolutionized pricing far beyond physical supply considerations. Trading floors became battlegrounds where fortunes rose and collapsed instantly. Brokers predicted supply shocks, diplomatic tensions, and technological developments. London traders understood petroleum psychology as deeply as petroleum geology. Their decisions affected millions, influencing currencies and government budgets worldwide. Oil shocks of the 1970s elevated London's role dramatically and unexpectedly. Nations panicked as OPEC restricted supply, triggering global economic turmoil. Amid chaos, London offered stability through advanced financial hedging instruments. Countries relied on London to protect themselves from catastrophic energy volatility. Britain couldn't control wells, but controlled risk calculations surrounding oil movements. This capability became more powerful than direct mineral ownership or drilling. The world learned controlling risk was controlling energy itself entirely. London's expertise allowed shaping market expectations during periods of uncertainty. North Sea discoveries strengthened Britain's position during turbulent global oil periods. Domestic production boosted energy security while expanding economic leverage internationally. London financed rigs, platforms, pipelines, and offshore engineering technologies. This industry sustained British relevance as energy geopolitics shifted rapidly. Firms refined forecasting models, predicting global oil demand with remarkable accuracy. Governments relied on London's projections, shaping national industrial strategies. British analysis influenced decisions across continents facing uncertain economic futures. Knowledge became power, and London possessed unparalleled analytical expertise. The city's oil traders became modern successors to imperial strategists historically. They navigated shifting alliances, sanctions, wars, and regional disruptions. They managed risk where armies struggled to secure stability effectively. Their screens reflected battles unfolding across deserts, seas, and capitals. Energy diplomacy evolved into sophisticated tool blending economics and geopolitical negotiation. Britain used its understanding of market psychology to influence national decisions. Offers of investment, training, and energy security built lasting alliances internationally. Britain shaped outcomes not through force, but through indispensable energy cooperation. Corporate giants, like BP, became extensions of British geopolitical strategy globally. Their investments shaped economies, funded governments, and stabilized fragile regions. These companies acted as proxies, enhancing Britain's international influence discreetly. Corporate decisions often carried diplomatic consequences, outweighing official governmental policies. London's commodity exchanges matured into world's most influential oil pricing centers. Here, traders determined daily values, dictating global energy affordability universally. Oil-consuming nations watched London constantly for signals of economic direction. Britain became nerve center, through which all energy expectations flowed. Financial products expanded oil's reach far beyond physical consumption patterns. Futures markets allowed predicting prices decades ahead with calculated precision. Hedging offered corporations resilience against political turmoil or sudden disasters. These instruments positioned London as stabilizing force during global volatility. Britain's intelligence services monitored energy regions as national priority consistently. Reports detailed sabotage risks, insurgent activity, and diplomatic instability. London's traders depended on this intelligence, shaping market predictions accurately. Economic warfare and energy forecasting merged into unified strategic discipline. The city protected oil infrastructure through intricate layers of cybersecurity measures. Digital attacks threatened refineries, pipelines, and international trading networks. British institutions developed defensive capabilities, countering emerging technological threats. Resilience strengthened London's position as guardian of global energy systems. Middle Eastern monarchies invested heavily in London, forging lasting partnerships. These alliances tied Britain to future of global energy direction. Sovereign funds used London as gateway into international financial markets. Capital flows reinforced a mutually beneficial cycle of influence. Diplomatic relations strengthened as Britain advised nations managing oil windfalls. London offered governance frameworks, preventing economic collapse from sudden wealth. Its expertise shaped diversification strategies for resource-dependent economies. This consulting role deepened British influence across energy-producing regions. Pipeline politics became central battlefield for energy influence and control. Britain financed routes bypassing conflict zones or hostile regional powers. New corridors shifted geopolitical dynamics favorable to British allies. Maps changed as London encouraged routes strengthening Western energy stability. Environmental concerns added complexity to Britain's evolving energy strategies. Climate pressure forced nations to rethink dependence on oil consumption. London adapted by investing in renewable technologies and transitional solutions. Yet oil markets remained core to global stability despite rising alternatives. Throughout this evolution, Britain retained advantage built on institutional intelligence. Long-term planning distinguished London from nations reacting impulsively to crises. Its financial engineers understood systemic consequences, shaping global prosperity. Energy became prediction game, and prediction became Britain's strongest weapon. Oil shaped the 20th century more violently than any battlefield strategy. Armies marched with engines. Engines demanded fuel. Fuel demanded stability. Every conflict revealed dependence on global petroleum routes controlled financially. London understood this dependency and turned it into strategic advantage. As superpowers clashed, London manipulated oil markets with calculated subtlety. Pricing shifts weakened economies, empowered allies, and stabilized fragile global structures. Oil became economic weapon governments feared more than conventional enemy forces. London wielded this weapon with precision masked by market explanation. The Second World War confirmed oil's dominance over military geopolitics instantly. Armored divisions stalled without fuel, aircraft grounded without refined petroleum. Britain protected Middle Eastern supply lines with extraordinary strategic commitment. London ensured continuous resource flow even during intense Axis offensives. Fuel convoys crossing oceans became Britain's lifelines connecting empire and industry. Every tanker represented risk, intelligence, strategy, and national economic survival. Lloyd's ensured voyages guiding global fleets through mine-infested hostile waters. Markets depended on courage displayed across Atlantic supply chains daily. After the war, Britain reinvented energy influence to match shifting geopolitics. Empire faded, but London retained knowledge essential for global coordination. Oil markets required arbitration, finance, insurance, and contractual legal clarity. Britain controlled these pillars, ensuring continued strategic international relevance. The rise of American oil power changed global dynamics dramatically. Yet Britain remained indispensable due to unmatched financial infrastructure worldwide. US companies still needed London for trading, clearing, and insurance. Energy networks relied on British expertise to manage volatility competently. During decolonisation, newly independent nations seized physical oil infrastructure assertively. But they lacked knowledge, capital, refining capability, and global market influence. London filled this void, offering investment, training, and contractual frameworks. Britain kept influence through cooperation rather than direct territorial domination. Energy corporations expanded massively, transforming into powerful multinational entities rapidly. Their headquarters operated in London, directing supply chains stretching across continents. Corporate diplomacy influenced political agreements, shaping access to global energy. London coordinated decisions affecting millions, depending on stable petroleum availability. The 1973 oil embargo exposed vulnerabilities inside Western geopolitical architecture. Arab producers asserted power by restricting supply to geopolitical adversaries. Prices skyrocketed, economies stalled, and global confidence rapidly deteriorated. In chaos, London's financial markets became centre for stabilisation efforts. Britain used financial engineering to help nations survive unprecedented energy shocks. Hedging mechanisms allowed governments to manage extreme price volatility effectively. London's traders predicted high-pressure market behaviour with impressive analytical accuracy. This expertise turned crisis into opportunity in enforcing London's energy authority. As OPEC gained influence, London expanded financial tools, moderating market dominance. Futures markets became instruments shaping expectations beyond immediate physical supply. London built pricing systems, reducing producer leverage over consumer economies. It balanced geopolitical tension using financial innovation instead of military force. Government advisors in London analysed global energy patterns, shaping future alliances. Their assessments guided international negotiations at highest levels diplomatically. Britain offered insight rather than coercion, gaining trust from multiple sides. This neutrality positioned Britain indispensable intermediary, connecting conflicting interests. Pipeline diplomacy intensified as infrastructure determined future global energy security. London financed cross-border pipelines integrating Europe, Asia, and the Middle East. These routes bypassed volatile zones, ensuring continuous petroleum movements internationally. Maps of global energy flows were redrawn by British institutions. Commodity traders rose to power shaping markets with lightning-fast decisions. Their screens displayed wars, storms, outages, and political signals globally. London traders influenced government strategies by forecasting impactful market disruptions. Their instincts became as valuable as national intelligence briefings historically. Corporate mergers transformed oil giants into global behemoths controlling vast resources. London orchestrated many mergers, creating energy titans, dominating international markets. Banks structured deals, evaluated risks, and stabilized post-merger global operations. Corporate consolidation strengthened London's authority across global energy governance. North Sea production expanded Britain's influence during economically uncertain decades. Oil revenues provided resilience, confidence, and bargaining power in Europe. London became energy capital, blending extraction, trading, and financial risk management. This integration maintained British relevance even as empires collapsed globally. London's legal system gained increasing significance within international energy disputes. Nations trusted English courts for arbitrating high-value petroleum disagreements. This trust ensured Britain influenced contract interpretation, shaping global energy rules. Legal power granted Britain enduring leverage without political confrontation methods. Intelligence agencies monitored threats facing pipelines, refineries, and shipping routes. Economic security required constant vigilance, protecting global energy infrastructure. Britain's intelligence community adapted, specializing in energy terrorism prevention. These efforts preserved international stability reliant on uninterrupted resource flow. Britain built economic alliances with resource-rich nations, seeking modernization assistance. London advised on governance, investment, and strategic long-term development planning. These partnerships strengthened British influence across Africa, Asia, and the Gulf. Diplomacy merged with economics, forming a hybrid structure of modern British power. Environmental activism began pressuring oil companies to reconsider operational strategies. Public demand for sustainability enhanced traditional industry norms significantly. London guided transitions through research, financing, and regulatory adaptation processes. Energy majors balanced immediate profit against long-term environmental responsibility. Climate agreements pushed Britain to prepare for post-oil economic landscape. Renewable investment grew as technology matured into profitable industry segments. However, global dependence on oil ensured London maintained considerable energy influence. Transitions required decades, preserving relevance of petroleum markets under British control. Financial innovation accelerated Britain's grip on global oil trading operations. Derivatives expanded complexity, allowing creative responses to extreme geopolitical volatility. London's analysts refined predictive models, outperforming competitors across shifting energy cycles. Data became essential commodity, rivaling oil itself in strategic value. Technology allowed real-time monitoring of global supply chains, influencing oil prices. London incorporated satellite tracking, weather analytics, and geopolitical modeling. Such intelligence ensured markets responded to facts, not misinterpretation. Data-driven stability strengthened Britain's reputation across international energy communities. Cyber threats targeted global oil infrastructure, challenging traditional security paradigms. Hackers attempted disrupting refineries, tankers, and critical logistical frameworks. Britain developed cyber defenses integrated with financial monitoring systems comprehensively. Energy warfare evolved digitally, requiring rapid adaptation across entire sector. London's role expanded into renewable energy finance as global markets shifted. Wind farms, solar projects, hydrogen hubs all required massive investment. Britain financed this transition while preserving influence over legacy petroleum. Energy diversification strengthened, not reduced, British strategic international authority. Sovereign wealth funds invested heavily in London, seeking portfolio stability. Their capital enhanced British leverage over international corporate behaviour. Relationships built on trust reinforced London's position within global energy decisions. Economic diplomacy flourished even as political tensions destabilized international order. Big data reshaped energy futures, giving Britain remarkable forecasting advantages. Analysts predicted long-term consumption patterns with unprecedented global accuracy. These predictions guided governments planning for coming decades' resource demands. Britain's expertise made it essential to international policy formation. Energy companies diversified into chemicals, plastics, mobility, and digital services. London structured these transitions, stabilizing corporate evolution of uncertain periods. These efforts preserved economic influence across multiple interconnected industrial sectors. Energy redefined itself, but London remained its intellectual and financial core. As global growth accelerated, energy consumption rose dramatically across continents. Britain coordinated strategies, mitigating volatility driven by rising Asian demand. London mediated disputes between producers and consumers, ensuring international continuity. Its diplomacy prevented crises that might have collapsed global economic systems. The return of great power rivalry changed energy geopolitics once again. Nations weaponized pipelines, ports, refineries, and critical maritime routes. Britain countered by strengthening alliances, securing shared energy interests. Economic partnerships became defensive shields against unpredictable geopolitical aggression. London harnessed financial sanctions to influence adversaries dependent on energy revenues. Targeted measures crippled national budgets reliant on petroleum export income. Sanctions froze assets, blocked credit, and isolated industries entirely. Britain used economic pressure as sword protecting Western strategic cohesion. Oil producers shifted focus toward Asian markets, altering global power dynamics. Britain adjusted, deepening relations with Asian financial and energy institutions. London expanded trading systems, linking Western and Eastern resource economies. Interconnection ensured Britain remained irreplaceable within global energy transactions. The 21st century shaped energy politics faster than earlier generations imagined. Population growth surged, industries expanded, transport networks multiplied relentlessly. Every nation feared shortages, undermining economic progress and political stability. Oil remained backbone holding modern civilization together beneath growing environmental pressure. London entered this era with sharpened tools and unmatched strategic experience. The city understood volatility, created opportunity for nations, mastering financial architecture. Oil markets grew more complex, requiring deeper intelligence and predictive capability. Britain adapted instinctively, preserving dominance through calculation rather than coercion. Energy wars emerged globally without single bullet fired in decades. Nations weaponized pipelines, prices, sanctions, and strategic infrastructure developments. Britain countered using legal influence, financial engineering, and diplomatic alliances. This conflict became quiet, intricate, sophisticated, and devastatingly impactful internationally. Britain's strength came from shaping rules other nations were forced following. Regulations designed in London influenced commodity behavior across global markets. Corporations adjusted strategies because compliance ensured continued operational viability. Thus, Britain directed outcomes through frameworks rather than overt aggressive force. Energy disruptions no longer required physical sabotage in modern era. Cyber attacks threatened power grids, refineries, and oil logistics infrastructure worldwide. Britain strengthened cyber defenses, integrating intelligence, fintech, and military expertise. These capabilities protected energy stability across continents, relying on British networks. Financial sanctions evolved into decisive instrument, altering geopolitical behavior globally. Britain targeted energy trade routes, shipping firms, and national oil companies. Sanctions denied access to markets essential for sustaining national budgets. Governments shifted policies when threatened with economic collapse orchestrated economically. As rivalry intensified among major global powers, Britain played mediator. It balanced relations with the United States, Europe, Gulf states, and Asia. Its neutrality allowed access others lacked during politically sensitive crises. London remained crossroads where energy adversaries negotiated through financial intermediaries. China's rise changed energy demand, shaping new geopolitical fault lines. Beijing required reliable supply chains, passing through contested global regions. Britain offered stability by financing corridors resistant to geopolitical disruption. Energy security became shared interest binding London and Asia diplomatically. Russia used energy exports to influence neighbours and challenge Western unity. Britain countered by coordinating European diversification away from Russian supply. Financial incentives guided nations toward alternative energy networks strategically designed. Economic pressure prevented Moscow expanding dominance beyond its immediate region. The Middle East remained epicenter, shaping energy tensions and global uncertainty. Conflicts threatened supply stability every decade, triggering market turbulence globally. Britain maintained deep ties with Gulf states, essential for international balance. Diplomatic reliability strengthened London's role guiding regional economic decisions. Energy companies transformed into hybrid entities, bridging fossil and renewable sectors. London financed their evolution, moderating transition away from carbon dependency. Banks supported green projects, while protecting legacy petroleum investments simultaneously. This duality ensured Britain guided energy transformation rather than resisting it. Renewables grew rapidly, yet oil remained central to global transportation systems. Aircraft required jet fuel, ships required diesel. Industries required petrochemicals. Britain understood transition would span generations, not decades realistically. Oil stayed dominant commodity, despite accelerating green energy investments everywhere. Electric vehicle expansion threatened long-term petroleum consumption patterns significantly. But EVs required batteries, metals, grids, and vast capital resources. London funded mining operations, infrastructure upgrades, and advanced technological research. Britain inserted itself into new supply chains, replacing old petroleum paths. Hydrogen emerged as next frontier, promising carbon-neutral industrial transformation globally. Britain invested heavily, establishing hydrogen corridors linking Europe and Atlantic. Energy companies aligned with London to develop scalable hydrogen infrastructure. Transition offered opportunity for Britain to shape future energy geopolitics. Britain recognized that no single nation could control modern energy environment. Interdependence created balance, requiring diplomatic precision and strategic adaptability. London thrived within complexity, using intelligence networks unmatched by rivals. Its experience navigating centuries of disruption offered enduring strategic advantage. Global commodity fraud, corruption, and smuggling threatened market stability substantially. Britain combated these risks through forensic accounting and advanced data analysis. Transparency initiatives strengthened lawful energy trade, protecting global economic systems. Financial integrity became a central pillar of Britain's modern global influence. Oil prices became battleground for psychological manipulation among competing powers. Rumors, forecasts, and political announcements shifted markets unpredictably. London navigated noise by grounding decisions in disciplined analytical frameworks. This discipline stabilized markets, reliant on British interpretive authority constantly. Shipping routes grew more contested as rival navies asserted control aggressively. Britain ensured tanker insurance avoided destabilizing global supply chain security. Without insurance, maritime trade collapsed instantly, crippling multiple national economies. London's underwriting decisions shaped naval behavior across international waters diplomatically. Conflict zones created choke points, threatening primary global petroleum arteries frequently. Britain funded alternative routes, reducing dependency on contested maritime pathways. These bypasses stabilized prices, routes, and long-term investor confidence reliably. Energy security became map of corridors forged by British strategic financing. Petrostates dependent on oil revenue faced existential threats during downturns. Britain advised financial diversification, preventing catastrophic national economic collapse. Its guidance stabilized regions, where instability risked triggering international crises. Thus, energy diplomacy preserved geopolitical stability tied to Britain's financial interests. Climate pressure forced governments to restructure energy consumption and production strategies. Britain positioned itself leader, advocating pragmatic transition balancing growth. It blended environmental goals with realistic understanding of market dependency. This moderation shaped global policies, seeking sustainable yet economically viable outcomes. Energy traders evolved into global intelligence assets, monitoring world events continuously. They detected patterns months before analysts within governmental institutions responded. London harnessed this expertise, feeding intelligence to strategic departments discreetly. Energy markets became predictive tools, guiding national diplomatic strategies effectively. AI transformed forecasting, risk analysis, and commodity portfolio management profoundly. London integrated machine learning into daily trading operations across sectors. This improved accuracy, speed, and resilience amid extreme geopolitical volatility. Technology amplified Britain's position as global epicenter of energy intelligence. As energy demand expanded through developing nations, competition intensified quickly. Britain facilitated partnerships linking Africa, Asia, and Middle Eastern suppliers. It shaped networks distributing benefits widely, reducing resource-driven conflict probabilities. Economic architecture influenced political harmony across increasingly interconnected regions. The battle for rare earth minerals reshaped global strategic priorities significantly. Britain invested in mining operations crucial for renewable energy technologies. Its financial institutions gained influence over mineral flows, powering modern industries. Control of future resources extended British influence beyond petroleum dependence. London's commodity exchanges remained heartbeat of global energy pricing mechanisms. Every contract reflected forecasts, events, risks, and shifting political landscapes. Prices determined by London influenced budgets of governments worldwide daily. Thus, Britain shaped global decisions simply through oil valuation and expectation. Major corporations relied on British risk management expertise, protecting global assets. Insurance, hedging, and diversification strategies emerged from London's financial culture. This support allowed companies to operate confidently, despite uncertain geopolitical conditions. Britain became backbone enabling energy giants to sustain global operations. As the global economy digitalized, energy markets followed with rapid transformation. Blockchain introduced transparent tracking for shipments, inventories, and global contracts. London integrated blockchain into legal and financial frameworks governing energy transactions. This evolution strengthened trust across complex supply chains vulnerable to manipulation. Economic warfare remained central pillar of Britain's national strategy consistently. Energy sanctions crippled adversaries by attacking their primary revenue streams. Britain coordinated international coalitions, ensuring maximum global compliance pressure. Unity magnified impact, forcing governments into policy changes benefiting British interests. London's influence endured because its institutions preserved continuity through uncertainty. Empires collapsed, wars erupted, technologies evolved, but London adapted. Its philosophy prioritized resilience, intelligence, structure, and long-term strategic consistency. These values allowed Britain to dominate global energy without physical dominance. Britain learned controlling energy, controlling modern civilization's essential rhythms. Whoever managed flows, contracts, risks, and expectations shaped global decision-making. Britain became conductor, orchestrating complex symphony of international petroleum movement. Energy followed London's tempo regardless of shifting geopolitical alliances worldwide. Even in renewable era, Britain retained influence through financial centrality. Capital, regulation, legal structures, and technical expertise shaped green transition. Nations required London's approval for major sustainable infrastructure investments worldwide. Renewables changed fuel, but not the structure of global power. Oil will decline eventually, but energy dependence never disappears entirely. Britain knows every transition creates new opportunities dominating tomorrow's industries. As long as energy defines civilization, London shapes the global order. Its legacy continues, silent yet profound, guiding humanity's technological evolution. If this story revealed who truly governs global energy flows, remember, power lives not in oil fields, but in contracts. Subscribe for more hidden histories, reshaping the world behind the curtain. Because the next energy revolution will be decided long before announced.